Welcome to Prime Cyber Insights. I am Aaron Cole. We are leading today with what can only be described as a massive tremor in the tech sector. Microsoft just saw its share price collapse by nearly 12%, which stands as their biggest single-day slide since the 2020 pandemic. This wasn't caused by a security breach or a major system failure, but by a fundamental questioning of the current AI gold rush and whether the payoff is actually coming for shareholders.
It is a historic day, Aaron. Despite the fact that they actually exceeded net income expectations with nearly $31 billion this quarter, the markets are reacting to the sheer scale of Microsoft's spending. They are pouring tens of billions of dollars into data centers, and investors are starting to ask where exactly the ROI is hiding in all that hardware.
The numbers really are staggering, Lauren. We're talking about a 66% jump in capital expenditures to a record $37.5 billion in just one single quarter. Most of that capital is fueling Azure's AI infrastructure. But when Azure's revenue growth actually slows down slightly, it creates this real crisis of confidence in the long-term cloud strategy.
That's notable. And there's a massive concentration risk here that we need to address. Out of Microsoft's $625 billion in cloud contracts, over half, which is roughly $350 billion, is tied directly to OpenAI. Aaron, from a risk management perspective, that looks like putting an incredible amount of eggs in one single external basket.
It's a huge gamble, and while Microsoft continues to push the narrative of being an AI powerhouse, their internal products like Copilot are facing some serious headwinds. With only 15 million annual users for the Microsoft 365 version and reports that AI agents aren't selling to enterprise customers as expected, the gap between hype and utility is definitely widening, Lauren.
That gap is exactly where the digital resilience conversation comes in. If Microsoft is supply constrained on hardware, but can't successfully convert that into software sales, they're left with very expensive, very power-hungry data centers that aren't paying for themselves. It's a classic case of infrastructure overextension that could impact service stability.
We are seeing the revaluation of the entire AI stack in real time. Analysts are now suggesting Microsoft needs to be valued closer to its historic fair value, rather than as a speculative AI rocket. The question for our listeners is how this affects the stability and pricing of the cloud services they rely on every day to run their businesses.
It certainly signals a shift from growth at any cost to a demand for proven efficiency. We'll be watching how Redmond pivots to reassure the market in the coming weeks. Thanks for joining us today. I'm Lauren Mitchell.
And I am Aaron Cole. Stay sharp and stay secure. We'll see you on the next episode of Prime Cyber Insights at pci.neuralnewscast.com. Neural Newscast is AI-assisted, human-reviewed. View our AI transparency policy at neuralnewscast.com.